So with prices going up so fast and interest rates on the rise, is 2022 a housing bubble like 2006? Well, in this edition of Mortgage Clarity, we're going to dig into that and find out what it means. So, you know, this market has a lot of feelings as a housing bubble like 2006 because of just the sense of urgency to get a home, multiple offer situations, and values going up very, very fast. In a normal market, you see home values go up to 3 to 5%. Last year in 2021, we saw 20 to 25%, with some states as high as 35% home appreciation. And as of this recording here at the end of February, going into March 1st, 2022, the multiple offer situation continues. So let's take a look and really break down. I don't think we're looking at a housing bubble. At some point in the future, absolutely, there's going to be a housing correction. The house is cyclical, like anything else. But the question is when will that happen, and how much will home values rise before that correction happens, and how deep of a correction? It is important to realize that in 2007, 2008, kind of the last, what we call the housing bubble that we had, that the amount of drop in home values was like second to none compared to the Great Depression. In normal markets, when housing does correct, it tends to stagnate or come down slowly. Not quite what we saw there. But let's just dig into the number and see if what's going on in the market is in fact a housing bubble. So we're going to drop down to this first chart. So I only have two charts here, very quick, very easy. So this chart here, the green line represents the birth rate over time in the US. And I did cut off the dates here, but to give you a point of reference, this peak right here, this is 2006, okay? And the green line represents population growth. So as you can see from the line, more people are either immigrating to the United States or being born in the United States than are immigrating out of the United States or passing away. So it's a positive population growth. Here is the housing bubble that we most recently remember. But as you'll notice here, the amount, this represents this dark blue line is inventory levels. So this is what a housing bubble looks like. We had a lot more inventory in the market than what the population really needed. This was allowed to happen because with loose lending guidelines, people were able to buy multiple homes that never really qualified for multiple homes or even one home. Because of the rules of not being able to state your income and stuff, we had people buying 3, 4, 5 investment properties. A lot of people are trying to be investors in flip properties. And so with all this loose lending, we had artificial demand built up. And so that allowed the supply to get so high. And when that all collapsed, that's what a bubble is, it popped, we saw this come down. But what I want to draw your attention to is right here. Look at this, population, inventory levels. As of right now, we're at like just historically low inventory levels. A healthy market typically has about 6 months of inventory. We're down to like a week or 2 weeks. And so there's just no inventory here. So in my personal opinion, in order for this to be a bubble, you would need this to be above the green line and not below it. And we're way below it. So to get balance here, to see prices drop, you would expect to see a convergence between these two lines. Now, I don't see a sudden drop in population. And given how hard it is to build inventory, I don't see a sudden rise in inventory levels as well. Now, there's always short-term things that can cause disruptions temporarily. Like when COVID first came out, people didn't want to buy homes because they weren't quite sure what was going on with COVID. So you start to see a little bit of a buildup, but once that fear passes, then all that pent-up demand hits the market and quickly takes the inventory back off the market. So let's take a look at one other slide here. Going forward, the number one thing that drives inventory and why we had such a discrepancy in that last slide is the first-time home buyer. The first-time home buyer, you have to create something for them. They don't have property to trade. People who are moving across the state, buying a bigger home or buying a smaller home, they're trading inventory. But the new first-time home buyer, they have to be built for. So the key demographic for a first-time home buyer is if you're 34 to 37 years old, married with one child, you are highly likely looking for a home to buy. So what you see here is birth rates. You can just Google this on Google and go back and find these charts. But this is the annual birth rate. And what I want to just point out is go back 37 years ago, right here, this highlighted area, and you're going to see a continuation of something that started back in the late 70s and has just been getting speed is higher than normal birth rates. So we actually expect to see over the next several years, 5 years, higher than normal first-time home buyers than years past, and until that peaks out. So both of these things to me tell me that we're probably not in a housing bubble. While values are increasing, it's great if you own properties to have that. But if you're someone thinking that perhaps maybe I should hold off and wait for values to come down, I don't know. I personally probably would not wait for that. My feeling is whenever that happens, if values go up 10% this year, 5% next year, 5% next year, and then finally maybe in year 4 you get that correction, and let's just say the correction is a 10% correction in value, you got to keep in mind, but you've gone up so much by that time that when you come back down 10%, it won't be where it's at today. So if you ask me, no, we're not in a housing bubble from what I can tell. All right, till next time, have a great day.